I am often asked, what does it cost to buy a home? So often people get focused on the down payment, whether that's the $1,000 minimum down payment with CHFA, 3% down with Fannie Mae or Freddie Mac, 3.5% down with FHA, or if you're so lucky to get VA or USDA, that's no money down. But in addition to that, you have your closing costs. So what does that look like? Well, my name's Nicole Rueth and I'm with Fairway Mortgage, and I wanted to run through this really quickly with you. And if you're looking to or planning on buying a home, you should really sit down with a mortgage professional, and we'd love to do that with you and plan out what funds you need so that you can determine what money you have today, what you need to gather through wages, bonuses, commissions, what you might need to get as a gift from a family member or a withdrawal from a 401k or IRA. So let's go over those closing costs really quickly. And they're broken out kind of into buckets. The first bucket would be the lender bucket, and that's going to be your underwriting, doc prep, processing, all the fees that it takes for a lender to do their job. And many times that's anywhere in the range of $950 to $1,500-$1,600. Then you have an appraisal fee, and that's typically going to be around $750. The Veterans Administration raised their rate about a year and a half ago, and with that, many lenders did the same, especially with the shortage of appraisers we have in the Denver market. Additionally, you'll have title fees, and the title company is the company that comes together and takes on all fees and disperses all fees and ensures that you have clear title and ownership to the home. Those fees are going to be around $1,100-$1,200. All in all, those are the fixed costs, and those are range in $3,000 to $3,200. Then you have your prepaids and closing costs, and that's much more dependent on the size of the home that you're purchasing, because you'll have your first year of insurance paid up front for the whole next year. You'll have escrows, setting aside a couple months of insurance and taxes to start saving up to pay for next year. And then you have your days of interest. No matter when you close within a month, everybody has to get caught up to the end of the month so that everybody starts fresh on the 1st. So if you close on the 5th, you have 25 days of interest. Or if you close on the 30th, you have 1. So that's an example of how all the fees coming together can really add up quickly. People start to think that they really just need to focus on the down payment, but you need to think about closing costs, and that can be in the range of $6,500, $6,500 to $7,000. Even more if you're buying a more expensive home. But I don't want this to alarm you, because there are ways to support that. You can get a lender credit to pay all of your closing costs. You can get the seller through home inspection items to pay your closing costs, or you can go with one of our down payment assistance programs, which we have many of. I've sometimes been able to give people money back at closing. So if you want to look at how we can get creative, limit your funds to close, and take advantage of the programs and opportunities available, I'd love to sit down with you. Again, my name is Nicole Rueth. I'm with Fairway Mortgage, and you can give us a call at our office anytime, 303-214-6393. I look forward to hearing from you.